Hi guys, welcome to the Ethereum or Ether session. And for those who are new to this, these are the key areas that my sessions will focus on, and they're based on two key concepts. Before getting into the details, you'll see this every time that this is for education and research purpose only and not financial advice. Without further ado, let's look at Ether. So, same story, Monday, February 3rd, all the crypto blanket drop. The good thing for Ethereum at least is it's bounced back immediately back to the short-term playground zone. It's got a pretty wide spread from 2,300, mid 2,300 to mid 3,000, mid 2,000 to mid 3,000 roughly. So a price range of around 1,200. It's 50% from, or 50% rise from the base. So it's been within this range for, let's see how long. Over a year now, interestingly, right? January 2024, the price has successfully closed within this range. Previously, it was all, well, tested a couple of times, but they weren't closing within this range, so I counted from January 10th last year. And then it has been trading within this range since. There were a couple of peaks that went above, but most of the times it's within the zone. So right now we've got a downward trend happening. You can say it's a rough flag pattern. Let me draw another line. So depending on how it develops, there may be a short-term bounce that goes above this upper line. So that's the typical textbook explanation for candles, but it's not 100% foolproof. So it can be seen this way or look at it this way, but doesn't necessarily has to happen 100% that way. So what does Wyckoff tell us in terms of the higher timeline? So we had our upthrust and we had our last point of supply, and then it's consecutive drop basically. This was like an interim rest, that's small green candle, but then two larger red candles follow straight after. So what's interesting was during here, early August last year, and also this week, we had two times that the price reached or almost touched the upper boundary of the long-term playground zone, and then it returns to the trading range that we have since December 2023 roughly, or early 2024. If it's developing a full Wyckoff cycle, the price would come down somewhere, but nobody knows exactly where it would end. It depends on how bad the market is. It can end shallower or higher and then accumulate on the top half of the long-term playground zone, just like this time we had between 2022 and 2023. And that's the case where things aren't really that bad. But if things are really bad, it can go to the lower half of the long-term playground zone and accumulate over there. obviously there would be arguments saying, oh, there increased access through ETFs where people can hold more ETH or even for Bitcoin as well, and price won't get that low. But I mean, this week is already proved that it isn't the case. The price can go lower. Of course, there are buying force over here, but still, for Ethereum, it's a test for the coming weeks, whether it can stay above this white line. If not, then obviously it can retest how willing are people to give up what they're holding or hodling, and then test another low. Hopefully it won't go as low as what we had in 2022. So for a bearish scenario, a better bearish scenario, the top of this white line, or this white box, the top line of this white box is a better scenario. Worst case scenario is the bottom of the white box. Medium is obviously similar to last time, somewhere at the middle of this box. So that's for Ethereum in terms of a bigger picture. And the price level, I've drawn these lines for I think a few weeks already. The yellow line is the support level set by the sign of weakness. That's around $2,400. And the purple line set by the automatic reaction is 2,950 roughly. So it became a resistant line this week if we look at the wick of this weekly candle. So for the coming weeks, if nothing particularly good or bad happens, it may trade between the yellow and purple line. Let's see whether that would happen. That's all for Ethereum for now, and see you in the Bitcoin